ETFs are having a moment. So to break down the surge, I have Dave Abner joining me from Northern Trust Investments. Dave, welcome.
Hi, Shannon, thanks.
Absolutely. So we're actually seeing record flows into ETFs. What were some of the key drivers of this trend?
Well, I actually think the ETF industry is reaching what I think of as escape velocity. Think about it like the sixth inning of a blowout, right? Like this is sort of just the beginning, and they're going to start to layer on runs the way I see it. So, I mean, first and foremost, with the ETF industry in the US, you get this massive tax advantage compared to everything in terms of products that has come before. So people, investors, advisors are both starting to realize that and use the products more. We've reached about $10 trillion in US ETF assets now, and the talk is, that took us about 30 years, and the expectations are over the next 5 years, we're gonna pick up a second $10 trillion. So we should be at 20 by 2030 roughly. So again, I think it's just sort of, the sort of ETFs are now really like, people have asked all the questions, what is an ETF? How do I use it? How do I incorporate it into my portfolio? And now they're sort of like, they've built out their core and they're moving assets in as quickly as they can. That's the way I see it.
And active management has been a growing focus for the ETF industry. How do you see that evolving?
So active and the active passive debate is so fascinating. It's been sort of raging in the ETF industry for a decade or more, right? Active ETFs is actually one of the fastest growing segments of the ETF industry right now. But it's interesting what we're calling active today versus what we used to call active. The way when I sort of grew up in the industry, active used to be, a sort of portfolio manager managing a portfolio of equities, like very sort of traditional active, right? Active today in the ETF industry is really about new structures using the active wrapper to bring sort of strategies that are unique to market. Options, buffers, ladders, they all sort of come to market as active ETFs. So it's a little bit hard to distinguish what's really going on in that category, but I think it's also going to continue as well. The sort of ETF rule opened the floodgates a little bit, and it made it very easy for managers to use the active route to bring all of these new and unique strategies to the industry. So it's kind of cool. It's going to continue to grow.
So on the flip side then, we need to talk about volatility because it's really been a defining quality of the market so far in 2025. So talk to me a little bit about the Northern Trust ETF lineup in the context of these particular market conditions.
Great question. Volatility is funny, right? It started, the year started off volatile. We're sort of smoothing out right now. We're back down to a 16 vol. The market seemed to sort of have adjusted to all the noise of the new administration. However, I think the new administration is going to have an impact for many years to come, and it's actually working it sort of works in the favor of Northern Trust ETF lineup right now. So our Flex shares, our two flagship ETFs, our top one is GUNR. We call it GUNR, GUNR. It's our Global Upstream Natural Resources Fund. What do you think the administration is focused on right now? Resources, right? Like he's making timberlands more available for mining. So it's not the miners, it's the actual resources itself. So that fund is a great fund positioned for this type of environment, and it's performing fantastically so far this year. The second fund I would talk about is a fund, we use the ticker NFRA, and it's our Global Broad Infrastructure Fund. So if I think about the other thing that the administration is focused on right now, it's building out America First infrastructure, right? All of the things that you would find in a core infrastructure fund. Broad, it's international, but that's happening as well. That fund also, great performer compared to, like, if you think about the S&P is probably up 2% this year. I think those funds are roughly up 10%, both of them, right? They're showing you that this is sort of a long-term trend that is gonna be happening for the markets, and I think the administration is gonna be focused on both of these goals for probably the next 4 or 5 years.
Well, it's certainly a space to watch. Dave, thank you so much for your insights.
My pleasure. It's great to meet you. Thanks.
For wealthmanagement.com, I'm Shannon Rossick.